Hello, and welcome to another day of TA the Degen way. Well, I just wanted to hop on and do a special episode on the Nasdaq. Here we're looking at our Trading View Ideas page for kind of a more macro outlook posted on the 16th. And I just wanted to do an update now that a little bit of time has passed here, a few weeks, and we're kind of starting to see some signs of weakness. And so I figured we would just take a look and see what is going on locally. So why don't we just hop right in to the chart. Here we're looking at the daily. And I mean, there's a couple things I want to point out right off the bat. Turn our background down just a smidge there. So, you know, if you look at this price action, you can see it's very, very rounded. You know, what are we looking at in this forecast? I mean, just a few things in here is, if you look at this overall, you can see the slope is rounding over. And if you look at each of these swings, they're getting smaller. And, well, you know, they're going up less and they're lasting less time. Same thing here. Smaller and smaller and smaller. And you can see even inside here, you know, how this is rounding over. You can think of this just like you would think of, you know, your regular bell curve. It's just upside down, you know. Just your regular old standard friend, the bell curve. You know, so when this here is getting rounded over and flat like this is when you tend to see a reversal. I mean, if we look back here, kind of like what's on that macro chart, you see this big push up here. And when time and price were square, the trend changed. So, I mean, that's kind of what we're looking at here in that macro forecast is somewhere in this general time vicinity, we should be expecting to see, you know, a potential pullback similar to something like this, which I believe is about 12%. About 12%, 11.5. One thing we can do right away is just grab this time and price wise and slap her up there, and you can see that it's coming out right at about our 200 moving average. You can see its price came down and crossed under that. You know, here it's resistance, broke through it. You know, it trends sideways as it. Look at here, same thing, you know, it's rounding over in the other direction. Same thing, just your standard bell curve. You know, and what do you see on the retrace? Your standard bell curve. You know, your 50% retrace. So, you know, if we're just looking at the same thing we got last time, I mean, that brings us down to about this 200 EMA. And if we grab our retrace tool here, we go from the swing low to the high, you can see that 382, or approximately a little bit more than 1/3, is coming out just above this, or 50%, I mean, is coming out right pretty much at this high. This 200, I would imagine by the time price gets down here, if it even does, we'll be at about this 382. So, I mean, our break of structure would come in right there at the 50% mark. You know, so I mean, I would expect price to come down here and either hit this 50% or maybe even go just a smidge farther. And you know, another thing here too, we've never really retested this with a pivot. this all-time high from before. We've got, you know, some pullbacks since breaking it, you know, and then continuation, but we've never actually had a pivot come back down into this, and that is also right at about our 382. So I mean, if we do a 382 retrace there, we could figure from there to the high is 38.2% of one move to the upside if we get continuation. So let's say that we do get this retrace. Let's take our average slope of descent. So here, what we got there, it's a little steeper there, steeper there, steeper, steeper. All these are way steeper. So here was our general downtrend. There we go. These guys are steep. So let's say that we take this descent right there. That puts us at about May 3rd. June 20th seems to be just one of those dates that markets just tend to reverse. Whatever it is, seasonal, astrological things, I guess I'm not sure. You know, so let's just mark June 20th on the calendar there. If we take that average slope, that's coming out right at about our break of structure, our 50%. You know, so I think this window of our last high down to this 50% mark, so from like 16,750 down to about 16 seems to be about the golden zone. And if we thought about continuation to the upside beyond this, which maybe we see, maybe we don't, maybe we should consider a larger retrace all the way back down to our low. And let's take some of these faster rates of descent, like this guy. And these are pretty violent. Pretty equal in slope, pretty equal in slope, pretty close. Pretty close. So this is the accelerated move. About 79 degrees. There we go. So I mean, you will see this on a lot of my charts right here. People think it's a Gann fan, and it has nothing to do with a Gann fan. It just doesn't. What I'm considering is I'm considering the bell curve. And I'm considering the areas inside that bell curve, you know, at different slopes going down that. So if we thought about this as the bell curve right here, you know, I would consider anything, I mean, down here to be pretty insane. But as, you know, you can see, it's certainly happened before. But that's what I'm looking at here, is I'm looking for this right here would be the average rate. And I'm looking for deviations around that because I want to trade the extremes. So I mean, I see those two options on the downside. There is, here is our kind of our average rate of descent. Here is our accelerated move, like, you know, that's these rates, that's this rate, and then I bet this one that I just kind of hand drew in there. I mean, would you look at that? You know, let's just actually just take that. You know, these are different slopes that this is the rate of change in time versus price. And you see these things repeat all the time on the chart. So it's kind of an in-betweener. These are the ones that I usually focus on. We'll just eyeball her in there. So, I mean, that's what I see for the downside. I mean, it just kind of depends on how fast price actually comes down, if it actually comes down. Why would I suspect it's going to come down? Well, I mean, you can see, look at the slope, you know, just like in this general forecast, you know, look at this push up. Look at how long it took and how high it went. Look at this one. Look at how long it took less time, and it went up less height. This here too, it took less time, less height. Boom. Look at this one. All that time, all that height. Less time, less height. Less time, less height. Same thing. Hopefully we get some downside there. And just like I'm doing right here, you know, if we consider if this is the bell curve, you know, just standard distribution. If you look at your Wall Street cheat sheet, which a lot of people like to look at, look in the upper right corner and you will see the bell curve. It's just a standard distribution model. So if we use the same angle style here, let's take this one out here. So that we'll set at 15 degrees. Next one we'll set at 30. And 45. There we go. So that is giving us way down here. It's giving us this guy right there, this 382. Or we got this 382 right here if we're only looking at the local pullback. Well, September 3rd, and this is that one that I just kind of roughed in there. Here, let's change that to 60. About 80. So this one should be about 40. Alright. Third quarter anyway, you know. So, I mean, I guess that's what I'm looking at on the Nasdaq if we see this pullback, and I think the best gauge is going to be to pull up a weekly chart and to trade the trend. And what do I mean by a trend? I mean lower highs and lower lows. You know, locally it wouldn't surprise me for a second if we come back up to 18,450, 18,5, put in that lower high before actually making our way down, or maybe just for kind of, you know, ranges on sideways here, chops on until we cross our time mark there. You know, I mean, what is this actually looking at? Well, I'm looking at portions of that curve. You know, this is where I would expect that curve to culminate. If we were to just follow that regular standard distribution, you know, we would expect this thing to culminate somewhere right in about there. So this here would be on the, you know, a good indication that we're on the downward trajectory. But I think a good gauge here would be to trade the trend, which, I mean, we may be on the downward already, because if we look at this here on the weekly, you know, what do we have? We have lower high, lower low, you know. But we're also at the very beginning of a trend change, if we're even getting one. So, I mean, I think the way to trade this on the way down is to take the weekly and just every week and every day just trade the weekly and daily trend, looking for lower highs and lower lows. So look for the high of day, but look for that high of day to be below the high of the previous day, and then look for it to break below the low of the previous day. And same thing on the weekly. We can take this weekly, just grab a ray tool, go to our previous week high, go to our previous week low. Look at that. Looking for price to come up as high as, until it actually exhausts, and we put in a weekly high somewhere below the previous week's high, and then look to carry that to the downside below the previous week's low in a downtrend. Lower highs, lower lows. And I'm going to be shooting for that 382 area, for the break of structure there. And if we consider upside, so let's say that we do pull back to our break of structure there, we would have a new range. Which would be our break of structure. So we pull back to right about there. Let's grab our retrace tool, and this time instead of a retrace, we're going to target an expansion. So this would be 2 times, so let's say we pull back here, this would be 2 times the range. You can see that's our 50 EMA also on the weekly. It was our 200 on the daily, so there's some more confluence for that area there. But so let's say we do pull back here, then we expand to the upside. Here would be a doubling of the range at 21.5. But I would be looking at this 20,000 area. It's a psychological number. Get our big push up, our pullback, big push up, our pullback, big push up, major correction. And even if we don't pull all the way back here, let's say that we only pull back to right there, your doubling of your range is 20,300 still. So that 20,000, then we could think about this larger trend the same way that we're thinking about our trend here. Think about this. Right there. Right there. And right there. Same thing. So that's what I'm looking at on the Nasdaq. We can come into some. So where should we be? To the local here. Where should we be looking to actually get short? I've shorted this multiple times already. But you can see we got one nice megaphone sloping downtrend with no real pivot lower high. We have, obviously, prices came back up here, and then here we got this nice big reversal bar. Let's see, so we're pretty much just bouncing off this 200 EMA, and if we don't have a cross here yet, but we're getting awfully close. I don't pay much attention to that, but if we just take a trend line, here would be a continuation of our trend. So there right off the bat, you're looking at 18,300, 18,250 or so. Take this support resistance flip there. Well, 18,275, 18,300. Could see a rejection there, or we could come back up here for, so let's draw some spider lines here. So let's set that one at 30 degrees. I like to space these out 15 degrees apart. There we go. Let's look for some more correlation. So we got 15, we got 30. Let's throw on the 45. And the 60. Grab our retrace tool. So on the 786, or about 75%. You know, so here's our new range. Here's swing high, here's swing low. Let's see. Yeah, so I mean, it really just kind of depends on where this trend exhausts, if it even pushes up here, which I do believe it will. We could take a measured move. Swing low, swing high. That brings us to 18,300. Which would be a lower high on this, so we wouldn't be putting in. What I would really like to see is to break this trend and to put in a lower high on this high. So price trended down, it broke out of that downtrend, started a new uptrend, you know, where I mean everybody sees that the downtrend has been broken, but that uptrend fails below the previous high, or it just probes above and grabs the liquidity and then, you know, comes back down and dumps like crazy. So I mean, the 786 level would be quite nice, but that still isn't breaking that high. Now another thing I want to check is, let's come down and measure just this range. So here's our low, here's our high. Here is where our 1.5 expansion comes out, which would be a break of this high. I mean, would this not be nice? Would be to get A, B, C, measured move, pull back, come up, right into the golden pocket expansion on this first impulse range. And then you'd have the same thing. You know, you have your first big push up. This one here is less and lasts less time. This one here is less time. You'd probably get a wedge coming into that also. What would that do? That would break this trend. It would stop out a lot of folks, and when everybody's wrecked, you know, everybody's shorting this now, like going to zero. Price come up, wreck everybody, stop everybody out, wreck everybody, put in a lower high, but it'll be a swing lower high instead of just this lower high and this lower high. We would actually change trend and put in that lower high right in the golden zone. Rocket to the downside. But that's what I'm looking at on the Nasdaq. You know, if you like this kind of TA, you should press the subscribe button. Like, share, subscribe. There is a link in the description to a free Discord that I'm pretty active in daily. If you want to learn how to forecast and just do TA or trade with me, we'd be glad to have you. But until next time, trade well.